Alright, I was doing some more analysis today. I was doing it. It's fun. I liked it. I was watching YouTube, specifically the Stocks channel. This is his chart on SPY. This guy does really good analysis. Very happy to subscribe. Hitting the like button. Absolutely. So this made me go back and have to reconsider some things about SPY because, I do have my bias and I am very bearish, and while I do think we are going to start crashing, it's good to do both sides of the analysis. As much as we may hate to do that, it's important to be open-minded. So let's have a look at what I've recently done in this SPY. This is a new chart, never before seen. Okay, well, it's kind of gobbledygook, so if you don't understand what this sort of stuff means just looking at the chart, you want to go to a video that I made. Let's see here. Here's my page. Go to videos. And you're going to want to watch this one, Elliott Wave Theory for Beginners. Basically, I take a popsicle stick and I say, hey, draw squiggles on a stick. And then, have that stick come up at an angle. And that's basically Elliott Wave Theory, or the logic rules there about which peaks will no longer pass prior valleys, etc. So it's pretty cool. I recommend watching that one. And while you're here, go watch my stock market crash theory from May 30th. Because, hey, check it out. I didn't do it very bad, did I? That was a pretty good stock market crash theory. So I got that one right. Let's make sure we don't miss the next big move in SPY. So let's just talk about the crazy idea of a bullish continuation following next week. Let's just suppose the markets are going to go higher. Where would that take us? Well, I believe what we're seeing is a zigzag 535 kind of reiterating itself into an extension. And so I have drawn these zigzags in yellow. Pretty clear, right? There's Z's, zigzag, conceptually fairly easy. A, B, and C. Waves A and C have 5 waves, hence the 5s. And wave B has 3 waves, hence the 3, 5, 3, 5. What's cool is when you get an extension of a corrective trend, you start to see the fractals. This is where that concept of fractaling comes from, the kaleidoscope. It just keeps going and going. And so to do that, we create another zigzag, because that is the, I guess you could say, the fundamental pattern. It's the rules, the logic, it dictates it. This is just it can happen in any number of ways. It really can. There's no predicting the future, but at the end, you're going to have to explain why so much progress was made over so much time, and during which periods of price action you were actually making progress, and that defines motive mode. Nonetheless, the stock market has been in a massive uptrend for a very long time. I mean, well, the uptrend we're currently working against is pretty big, and this might be a good thing to discuss as well. This is the 2020 low, and that uptrend broke forever ago. We're pretty much not in that uptrend. We're going to have to zoom out, way out, to see the uptrend we're currently in. We can draw it from way back in 1980, 1990. We're going to use the 2008 low because this is, I believe, where we are going to be referencing our correction level at the end of the day. So, editing property is going to make this green. This is how long this uptrend is, okay? 2009 to present. Very, very, very long. So the pattern through which we correct this length of time will be equal in proportion, right? So maybe this is all just the beginning of the first half of a larger move. See, for W, get this zigzag out of here. X, if you can see it there. And Y, coming down probably to make contact with this uptrend. So that's where I think we are. And guess what? This can be true. This can be true while SPY rallies into as high as, drumroll please, $429, the August 22 high. This is the peak, which will define whether or not the price has actually entered into a bullish mode. Otherwise, it's still moving in beautiful reiterations of ABC corrective waves. Just beautiful. You can just look at this. Oh, it's so hard to trade through here because the corrective cycle is the least predictable. The least predictable. You always know which direction wave 5 is going to go, right? But you never know which way you're going to go after wave 3 because you could extend or you could go into a correction for wave 4. Wave 5 is the wave I want to trade the most. That retracement is everything. Anyway, so basically I made a measured move up from that most recent low this year, last year, 2023 now, holy cow. And when I do that, 100% price target is 420, wow, just below that August 22 too high, right? Wow, it's almost like this is probably where the price is going to go. See, I hate thinking about that. I'm like, I think the price is going to go down. I mean, it could go up a little more. Yeah, this would be ridiculous. But then you need to be moving down for a while, probably. Can you imagine if SPY blew through here? Then I would honestly be looking for 459. And the symmetrical triangle target I currently have is at 447, and the price is moving above that price, above that breakout. So, yeah, quite honestly, if we break 417 with strength and volume, and volume is going to be important here. We're going to see a volume push above 417, and then 429.70s would be the next target, and following that 447 and 459. And after that would come a big retracement, right? Because we'd now be making a motive wave, and A would become 1, B would become 2, and we would just have to find wave 3. And we would be simplifying this chart to probably, can we really make this 3 waves? Probably, we probably could. In fact, I think I might have an SPX count, which I won't go into now, that it does have that. Anyway, so I was thinking about the bulls and how far can we run until we're actually bullish 429.70. Above 408, I said, yeah, let's talk bullish. And we've run to 417, so we're talking. Anyway, that's all for now.